Let's bring in our headliner now. BlackRock's Rick Rieder. He's the CIO of Global Fixed Income, head of the Global Allocation team. Welcome back. It's your first time on in a few months. It's good to see you again.
Thank you, sir. Thanks for having me.
And when you did come on last, you reiterated your view that stocks are going higher, equities are going higher. Those were your words, and that's the way you said it, and you were confident as ever, Rick. So 3 months later, are they still going higher? What do you make of where we are today?
I would say with a very definitive, I don't know at this point. And I mean, it's quite frankly, a big departure from where we were 3 months ago, Scott. I mean, first of all, the equity market had a pretty good go. We were up 27% last year. But I think your panel was describing it right. We are in a tightening cycle. And we're in a tightening cycle, which I think is unclear at this point. Listen, the Fed has gone a long time of putting QE into the system. And now we're going to learn more about how fast they're going to have to pull it back. And nobody's ever seen a paradigm where a Fed is doing QE up until a time now they're going to start raising rates and then maybe reducing the balance sheet as you get later into the year. So it's, I think it's a time for reflection. It's a time to think, gosh, we've come a long way. Maybe we paused a little bit. Listen, I think at the end of the year, I still think equities are going to be your best asset class, certainly relative to the bond market. I think equities can be up 10% this year. How they get there, I think, is unclear. And like I say, I'm looking forward to next week and seeing how Chair Powell does and talks about where policy is going to be and how quickly they feel like they have to bring the economy or bring inflation back down again.